Hello and welcome to another MCO market update on Bitcoin. Yeah, today we take a look here at the shorter time frame for BTC. While I record this update, the price is in a potential sideways range. I mean, it's clearly in a sideways range. We have a Fibonacci support area located here between $81,050 and $82,590. And this is micro support, okay? This is the currently active micro support zone. The price is clearly for now respecting it. It is only a support area here on the smaller time frame. It is not so relevant as well, so a break below it could still, the price can still potentially find a way to turn around. But the bottom line is here that the move to the upside that we're tracking in the yellow scenario, and I'll show it again here from this swing low on the 11th of March, it is only a diagonal pattern. So we have a wave 1 to the upside, a wave 2 to the downside. This would be an AB structure. And then this is the standard support for such a B wave pullback. And sure, from here, a C wave up could happen. And that would be then an ABC structure in wave 3. Then we can track the wave 4 support, and one more high would give us 5 waves. This would be a roadmap into the 90K region. Okay, and to keep that alive, there are 2 levels that are relevant. First of all, the 81,050 level, that's Fibonacci support. It's the 78.6 retracement of this A wave to the upside that unfolded from Thursday the 13th to Friday the 14th. Any break below it will already indicate that this structure will get invalidated. It's not an invalidation point, but it is indicating the structure is going to invalidate. One of the previous videos we were tracking also support for a potential impulse, but the market confirmed it's not an impulse, which means the market hasn't really fully decided. If it's not an impulse, then the bulls are not clearly winning, which makes essentially trading more difficult. Also tracking the patterns will be more difficult. Any break below 81,050, any break below 81,050 will likely lead to invalidation. The invalidation point, and that's the second level I just talked about, the invalidation point is the red line here at around 80K, okay? That's the swing low from Thursday the 13th. As long as we're holding that, the diagonal pattern has a chance. And it would be further confirmed with a break above 85,470. Again, that is let's say that's a breakout point to the upside. It's key resistance. It takes a decisive break above it to confirm the yellow scenario further. So these are the levels that matter from a bullish point of view. Again, it's only a diagonal structure. It's not an impulse. From that point of view, it can easily break. Okay, it's just very important to understand what is a diagonal pattern from an Elliott wave. No, from a mindset point of view, from a sentiment point of view, it means that the bulls aren't clearly winning. That can change, but in a diagonal, things are very, very fragile, and we're dealing with corrective price action. Now, that takes us to the short-term bearish count, which is possible, but the bears have not yet really driven the price below support on a sustained basis. And we also don't really see impulsive price action to the downside. So as long as the market holds below 85,470, let's say the short-term bearish count, which is highlighted in white, has a chance. In this scenario, okay, wave 4 maybe even already topped, but I could even see potentially another test of resistance. But what needs to happen for that is a break below support, 81,050, followed by a break below that invalidation point. And then we can keep an eye on this area down there, 72.6K to 75.3K. This would be the short-term bearish scenario. It's important to understand against which levels the focus can be on higher prices. And it's this Fibonacci support zone here which matters. Against this area, the focus could be on higher prices. But again, it depends on which perspective you want to take. When the price tests resistance and we see a rejection, it might even be a short trade opportunity. But I don't see a clear short trade opportunity right now. From an Elliott Wave perspective, it would require a 5-wave move down followed by a 3-wave corrective rally. And you can see that there are a lot of stops that will be placed here. So getting above this area here, the golden ratio level as well, could trigger that rally into the 90K region. Overall, I mean, this is really just a micro price action. I don't really have a clear preference. I think from a risk management point of view, it's wise to prepare for another low. However, We are in an area where the market was very oversold. I spent the last 1 or 2 weeks extensively just explaining that there is still the thesis that we should at least get a bounce on the daily chart. We do that every day from this region, a rally, and ideally even to new all-time highs. There are a lot of on-chain indicators I presented, especially also in the membership. There are indicators I showed you yesterday, like the RSI, the stochastic RSI, the MACD, showing bullish signals. So I wouldn't get so worried about the microstructure, okay? Consider that we are deep in support. Also, the, let's say, more traditional markets are deep in support. We talked about that yesterday in our member live stream. So talked about the NASDAQ, talked about the S&P, showed you the patterns and showed you that we are really at key decision points. So this is a very, very important week. And it's time to be watching the charts, not to give up, even though it is frustrating. But I think we are really at an important point at the moment in the markets, So that's the update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, I invite you to follow us on X. For the next hour, I'll be on X answering questions live about Bitcoin, about the chart, about the analysis here. There's a post about Bitcoin from 1 hour. Just reply to that post. I'm going to answer all your questions. Feel free to join us there for more in-depth conversations and discussions around charts and other things, mindset, and so on. Check it out. Link is in the description. You can find it also, pinned in the comment section below. See you there. Bye-bye.